It's about that time of day again here, folks. Welcome back. Boy, that weekend went by fast. Here we are once again for a Monday edition. It's 7:30 a.m. You know what time that means. Time to do some crude oil trading strategies. I'm going from the screen here in Los Angeles all the way over to the trading floor on the NYMEX exchange in New York City this morning. Welcome to your crude oil squawk for Monday morning. It's the 1st of July. It feels good to be alive this morning here, the 1st of July. Happy summertime. This, of course, is when it really starts to feel like summer. My name is Joseph James. I'm a lonely old technical analyst. I run a live trade room over at SchoolOfTrade.com. Give me a shout. Love to hear from you. As always, I'm going to be doing a technical approach. That means I'm focused on using chart patterns, right? Swing highs, swing lows, wedges, channels, moving averages, right? Certain things like that. I'm going to begin with a top-down approach this morning, starting with a weekly chart, daily charts, hourly charts, and moving all the way down to a minute chart this morning so we can analyze what happened overnight. We can analyze what happened coming out of London. Now, we are trading in the U.S. morning session coming up here next, which means we're going to be looking at the previous trading session, which, of course, was London. If I'm trading in London, I'm going to look at the previous trading session to that, which is the Asian session. Okay, so keep that in mind. That's the reason why I'm saying we're looking at London. My job this morning is quite simple. If I can anticipate the direction at the open, I can find where the highest percentage opportunities will occur, and therefore I'll know how to put the odds in my favor. Every trader needs a plan, right? And every plan needs to be executed with discipline. So this morning we come in, we analyze from the weeklies, dailies, hourlies, minute charts. That's going to leave breadcrumbs along the way, and I'm going to use those breadcrumbs. I'm going to use those clues like a detective, right, to put together an educated opinion or an assumption or an opinion of what is likely to happen here at the open. Once I form that opinion, then I find those high percentage trading levels that we're going to discuss here in just a moment, and we'll be looking for those trades starting at 8 a.m. Eastern Time. Now, I'm not going to take up all your time this morning. We're saving the best for last on today's broadcast. And that means I've got Marty Errico waiting in the wings. He's got his feet on the ground on the NYMEX exchange. Guys, did you know that Marty has a broadcast every morning at 8:50 a.m. Eastern Time? Him and his partner Jeffrey, boy, they run that NYMEX between the options and the trading pit, guys. They do a great job every morning, 8:50 a.m. Marty's going to be providing us with the pit analysis today. Very, very important. For all you screen traders out there, we don't get this stuff very easily. I've got to have a bunch of different data feeds. I've got to really know what I'm looking for. We've consolidated all that information here into this broadcast. And so Marty's going to be analyzing what he's seeing from the pit. In other words, we're looking at market direction, right? Intermarket divergences between crude, RBOB, heating oil, and Brent. We've got market internals. We're looking at some of the most important option prices. And as always, those very important and oftentimes a little bit confusing price levels. If you're a new trader, you got to remember there's a big difference between electronic trading hours and regular trading hours. All right, so Marty will be looking at a very unique way of looking at it this morning, looking at the regular trading hours directly from the pit. All right, guys, that's all the chatter here this morning. Now that you know the deal, let's jump right in. First thing I'm going to do this morning is it's a Monday. I always feel like that guy from Office Space, right? In the case of the Mondays here today. Monday, Wednesday, Friday. Good idea to grab a weekly chart to begin. Remember, kids, if you're following along at home, these weekly charts are not used to take trades with. They're more just used to know where we are in the big scheme of things. Think of this weekly chart as a map of the United States. And now think of this current location of price action, right? That's a little dot on the map. I can see where we are. I can see we aren't at the highs. I can see we aren't at the lows, right? I can see we're not tucked inside of this wedge, okay? See what it's doing? It's eliminating concerns of mine. It's giving me lots of clues as far as what might be coming today. What does this chart tell me for a clue? Does it look like we're more bullish or are we more bearish? It looks like we're more bullish. Okay, now that we know it looks like we're bullish, of course, it doesn't really go that far. We're going to look at some faster time frames to see if we really want to be getting long. But this sure as heck gives us a good head start. I can see this morning this bullish weekly candlestick, right? Bullish move above the price wedge. Now, of course, we closed off the lows of the week last Friday, but boy, this week is off to a great start. At the top of the candlestick wick, right? We've got a wick at the bottom, big, well, not very big compared to last week, but we've got a full-bodied green candlestick on the weekly chart, and I can see we got plenty of room to go higher. 100, there's that big round number again, the granddaddy of all big round numbers of 100 even. That one, of course, is ready to rock here for our next potential price level to be tested. Look for that 100 level later on this week. Now, the daily chart gives us a clue. We're looking bullish. But in all reality, guys, we need a little bit more than that to be able to put together an opinion of where we're going to enter the market. Now, if I was a commentator on CNBC or Bloomberg or name your average news feed or average website or television station these days, and that would be enough for me right there at the weekly chart, right? Most analysts these days, they just want to call direction. But for the rest of us out there that have to actually eat what we kill, for the rest of us out there that actually get paid when we trade profitably, we need to now take that weekly chart and say, okay, how do we make money off that? We can see the direction is moving higher, but lots of people, just turn on the television set, lots of people know direction. Now let's look for entry locations. I need to find low risk, high reward entry opportunities, and now we see the 4-hour. The 4-hour chart is quite simple, guys. 4-hour chart is a blend between a very slow time frame and a very fast time frame. Okay, 4-hour chart to 240-minute chart, and the first thing it tells me is we've got the bull channel. That sums up what we saw on the weekly chart. So we know we're looking to buy pullbacks. The minute I see these bull channels, it becomes very easy for me to tell the direction of the high percentage trades. That's right, the high percentage trades. Think of a high percentage trade just like having a high percentage hand in poker. If you get dealt a full house in poker, I probably should wager on that hand. That's what I'm looking for. I'm looking for those hands, those full houses, and I can do that by looking to the buy side when I see the bull channel. Now, what does that mean for us right now? Where are we inside of this bull channel? Zoom on in here now. We can see the bull channel. We can see that where are we now? We're near the highs. Okay, Joe, so what do you got for me now? A little curveball. How do we buy at the highs? We don't. What? Wait. I thought you said we're buying pullbacks. You're right. We're going to have to wait just a little bit here. I'm going to wait for price to either reverse off the highs, short-term sell, where I will then buy pullbacks. I have to be aware that we do have lots of resistance overhead, but you know me, I'm always going to leave a runner target on crude oil futures. Crude oil, natural gas, the Russell index, these are markets that you will always want to leave a runner. So what am I going to do? Well, again, first job is trade with the long-term trend. So I know that, boy, if I can get in long at 96.35, 95.74, 95.75, guys, if I can buy that level, jackpot, full house. I'm going all in, right? That's the sweet spot today. But what if price keeps going higher, Joe? Then what do I do? Well, the reality is I don't want to buy into the highs. The risk to reward is out of whack. If I buy the highs, my reward is much smaller than the amount of risk I must use on that trade. Okay, buying the highs is a classic rookie mistake. We know we want to be going long, but it's going to be like running into a brick wall a few times trying to buy these highs. So what I have to do is this. I have to wait, and what I will look for is I will look for a short-term selling opportunity. Yeah, that's right. I'm a scalper at heart. I've been doing it for 10 years now. I will look for scalping short opportunities using this sell zone at 97.36, using the top of this price wedge. So short-term selling opportunities will lead to long-term buying opportunities here on crude today. Now, boy, I'll tell you, talking to Marty about this before we started this morning, it is the 4th of July holiday week, so keep in mind this volume might be low today. What do we know about low volume going into a holiday week? We know that anything can happen. We could see a $3 tear today, up or down. We could also see very narrow sideways ranges today. Anything is likely. Now, the next few charts I show you are going to show that we're probably going to see that wide range today. I'm going to show you more about that in just a moment. But before I move forward, though, what did we learn from this 4-hour chart? Short-term selling opportunities, long-term buying opportunities. Could I buy right now? Yeah, you could buy right now. But again, I think you're going to be better off waiting here for the reversal and then looking to take that reversal for a long-term, right, buying opportunity. So you could get long right now, but make sure you're taking your profit quickly here. I don't expect this price to keep going unless, of course, we get that somewhat consistency out of crude oil, which is to run without anybody's standing in its way. Short-term selling opportunities, long-term buying opportunities this morning here on crude oil futures. Let's move forward. Now that you guys know what I'm looking at in the long term, let's now move forward. I want to show you what the 60-minute chart's telling us here on crude. 60-minute chart. This is not a very good look to our market personality this morning, guys. You can see the bull channel. Now, if you recall, the 4-hour chart also showed us a bull channel, but this time now, we've got another big clue in front of us. Another bull channel, but as you can see, though, that price wedge, when I started drawing on this chart this morning, price wedge showed up right away, right? So we can see the price wedge. We can see that this wedge, though, has been broken now. So in the last 5-10 minutes, we have clearly made a new higher high. Now, this chart has 15 minutes left. 16 minutes left until this 60-minute hourly chart closes. So 8 o'clock, we're going to wait and see what this chart looks like then. Will it look bullish like it does right now, or will it have collapsed back down below this 97.15 sell zone, which we can see right here? This chart illustrates exactly what I was talking about on the 4-hour. Look at the sell zones. 1, 2, 3 sell zones. Now, sell zones, what exactly do they tell me in relationship to this bullish channel? So, Joe, you go right into a sell zone, but do you really want to buy into a sell zone? Absolutely, I do. I'm going to use the bullish channel to put the odds in my favor. I'm going to use appropriate profit targets because I know that I must take my profit conservatively. Knowing the market personality of crude oil, I will take early profit targets in case it's a fake out breakout, but I will leave a long-term runner target just in case, like I said, we go on that tear today. We never know when that home run pitch, we never know when that full house deck of cards or hand of cards is going to be played. So we know that we're going to take short profit targets and then leave that monster runner because we are right at the lows of that bull channel. Levels overhead here, 97.15, 97.54, and 97.93, in addition to, of course, the swing highs at each spot. So we have levels, as you can see here, overhead that we'll use for profit targets. I'm shooting for that 97.82, right? That's a little bit too easy to see that level overhead. 97.82 will be an easy runner target here for us if you're getting long with me this morning. So buying pullbacks here long term. Again, short term, though, don't be surprised if this thing comes off these highs in the short term and sets up for a nice opportunity to get long. Last but not least, I got my 5-minute chart before I head on over to the NYMEX exchange. We'll get Marty Errico on here next. As you can see, first thing we see on the 5-minute chart, a couple really important things here in this 5-minute chart, guys. First thing I notice is we got a pretty wide range. The size of the range overnight determines or usually leads the way to either a very large range on the day or a very narrow range on the day. I talk about this every time we do this, guys. The London trading range, in other words, the session before the U.S. session, is very important at giving us clues. What we can see is the overnight range is very wide. More importantly this morning now, I have levels of resistance above me, 97.21 and 97.42. These are my hot zones today. I will be looking to sell out of this reversal zone. So as you can see, this gives me even more credibility to that 60-minute and that 4-hour chart. You can see now why I'm going to be short-term bearish, but long-term bullish. Again, it'd be nice to get price to pull back, 96, 94 area, just below the 97s, and then let's go, right? That's the type of buying opportunity I'm talking about this morning. So short-term selling opportunity at the highs. These levels below us of support, they will need to be adjusted higher. We have made a new higher high. They'll be a little bit higher. So again, assume maybe 95s here we're looking to buy. I'll adjust these higher and I'll put them up on the blog for you guys. So we know we've got levels below us. Adjust those a little bit higher. I'll be able to put those up in the blog here for you shortly, but I am looking short here as we speak. At the lows here this morning, at the bottom, actually real quick here, before we go any further, there's that 97.83. Remember that level we talked about on the hourly chart? Just finished talking about it, right? You can see that level overhead is the previous high of day. So of course, if this price goes off in a tear, I've got trend lines here, and I've got the previous high of day, 97.82. You can see that's also the previous week's high. That's my profit target for a buyer today. That's also going to be a place ripe for another excellent price reversal. Again, this bullish tone to the market tells me I'm buying at support. But at the same time, though, I will not be afraid to sell at major resistance levels, such as the reversal zone overhead, the trend lines overhead, and, of course, the previous high of day up here at 97.83. Right? Always love that level no matter what market I'm trading. As we go lower this morning, I've got that buy zone, that reversal zone down here at 96.44 to 96.23. That is my sweet spot today to be a buyer. That would be ideal scenario this morning. You can see here we have a trend line creeping in here. If you change this 5-minute chart to a 30-minute chart, you'll see this trend line start to show up pretty easily. And this trend line will indeed be an excellent location here for that buy, guys. Don't be afraid to grab that trend line as major support. I've got 95, 96, and then if you scroll down, you'll notice I got the previous low of day, 95.48, all the way down here at the lows. All right, so if you zoom back in time, you'll notice last Thursday, that previous low of day, 95.40, what's that? Yeah, 95.48 down there at the lows. All right, guys, now you know the levels I'm watching today. Now you know why I'm short-term bearish, why I'm long-term bullish. And now you can see I've got the buy zones waiting for you below me. I'm just waiting to get long here and then leave that runner. Now, again, I want to remind everybody, boy, it's a holiday week. We've got a very shortened holiday week this week. I've got all the charts up posted for you guys already on the blog. Don't forget, though, head over to sidewaysmarkets.com. Head over to sidewaysmarkets.com, and you'll see a full morning prep this morning for all today's news that we'll be waiting for here at 8 o'clock. All right, that's all you hear from me today. You don't need to hear me flap my gums the rest of the day today. I got Marty Errico waiting for us on the other side. We're going to go all the way from the screen all the way to the floor here. I'm in Los Angeles. We'll go all the way across the country to my good friend Marty Errico from Traders Audio. Marty, how are we doing this morning? What are you seeing out there? How's the floor looking again ahead of this holiday-ish week? How are you looking out there?
Empty, but besides that,
you're supposed to say it's filled with excitement this morning.
Empty. Hello. Yeah, you hear the echo here. Guys, basically, I got some traders that, well, across the board, they are really kind of looking to sell this market, believe it or not, right? We've been seeing recently, every single time we've been getting up to this $98 level, right? $97.5, $98 level. We've been watching a little bit of a sale, right? And last night we took a look at some charts, and it looks like we're at the high of our wedge on most of our charts here. We're talking short term, longer term. We're talking like wider range. We're looking at really anywhere from last month to 2 days ago, right? So the range is thin. The range has been narrowing up as we are at the high end of it, and we're looking for a little bit of a sale, right? So every time we get up to 97, every time we get up to 98, we end up pushing it lower, and there's a couple reasons why I think that we could trade a little bit lower here this week. Sideways chop. I mean, it's going to kind of look like Friday's trade, for instance. That's what we should expect this week. Friday's trade yesterday. Little tight range overall, maybe $1.20 range each day, but it will be sideways, really not continuing the one direction, but a decent range, at least $1.20. You guys can make money with that, I'm sure. So the reason why I'm saying we could sell out just a bit on crude is every time we get back up to our range high, we sell it. So one, we're really oversold in crude at the moment, and we have a lot of oversupply in the market. Okay, there has been no supply interruptions at all of what's been happening over in the Middle East. There's been no supply-demand interruptions whatsoever, right? So no supply disruptions in the Middle East. Just they get spooked every single time something happens geopolitically. It's just a little spook that moves the market higher, but it's nothing that's steadily holding us. Two, we do have some nice resistance above including 97.50, 98.06, and 99.25 and 100, right? Those are some levels of resistance, and if we don't trade above there, then we can't get up to 100, unfortunately. 2, we have OPEC as well. OPEC's actually coming into this market, and they're trying to sell their product, obviously balance out all their budget and their supply-demand figures. And when OPEC needs to sell oil like the way they need to right now, that's very bearish as well. Okay, they can obviously, if they can sell up at 100, that would be a little bit easier than selling at 90. But at the point, looking at their balance sheet and their budgets right now, OPEC really needs to sell it, and that's a very bearish thing. So why have we been rallying up then? Why have we been trading up to $98, $97? Why have we been trading up to 99? Well, the speculators have been, obviously, we've been giving grant to the speculators and into the bulls as well. We've been giving a lot of the benefit of the doubt to the speculators and bulls, and we've been obviously trading with them. But at this point, I think we just trade within range. And yes, we will get back up to 97 and 98, I believe, but I just think we trade kind of sideways to the downside just a bit here in the next few days and in the next few weeks. So we can talk about the Brent WTI spread right now, and the Brent WTI spread is very bullish, right? We look at the Brent WTI spread, we see some divergence in this market. We see a bullish Brent WTI spread. We see a bullish Brent crude this morning. Products are about eating oil, but I'm thinking we can fade the bid here, fade the highs of the range. As we look at yesterday's or Friday's range, Friday's high of the range for crude oil was 97.63. I'm guessing and I'm figuring that we can sell the high of the range back lower and trade within range between 95 and 97 for the next couple days. Again, we only have about 3 solid trading days this week, with the exception of the holiday. So let's now really quickly just talk now about let's see. Well, with Brent WTI check, RBOB check. Now let's talk about levels, obviously, next, as always the case every single morning. Oh yeah, another thing, open interest has been falling just a bit as well, so that's actually another little divergent-like type activity where we see divergence here. Now, the divergence in the counter spread is divergence in the Brent WTI spread, right? Brent WTI spread's bullish, counter spreads are bearish, so it's divergence, and it's telling you it's just a simple range, 95 to 97, 95 to 98 at most, okay? So that's really it. We can call 95 or low, and we can be buying that 96 half, as JJ was mentioning on the way down. We can buy the 96 half. We can buy the 96 even. We can buy 95 halves and 95 evens, and I believe it's going to be the low end of the range. So this morning, we look at Friday's pit session high and low. Pit session high 97.63, the low down at 94.66. We closed and settled the day at 96.54. Daily pivot 96.87, which we are trading above at the moment. Again, trading well above the daily pivot for today, up in the 97.20s. Alrighty, guys, so I do have a little bit of resistance above at 97.30, 98.06, and 99.25. Of course, that big round number 100 can also be a level of resistance, right? Down below, levels that we could be buying, watching some support. We have 96.11, 95. 68, and we have, we'll call it 94 half, 94.49, right? So these are some nice little buying opportunities that we can come in, but I really think we'll trade sideways today, within range, volatility, low and slow, 22%, OVX 20, actually, we ended up settling the day 22.23 on the OVX, and I know that by heart because I was looking at it before, so sorry, wrong on that OVX. 22.23. That's correct now. We still continue to watch just a little bit of upside activity here in the calls, 95, 97 half, 100, some 102 calls. But I'm telling you guys, there has been more activity on skew. Look at this skew. Only 3,000 opposed to 5,000. So there's been way more money being placed on the downside, believe it or not, as they just shore up the downside for this slide low. They shore it up big time, guys, around the 88. They shore it up at 90, 93, and even 95. So they kind of have their stops in play. I really don't see any big participation here coming on into this holiday week as we now continue on to natural gas. Now, unfortunately, I don't have any charts for natural gas at the moment, ladies and gentlemen, so you guys are going to have to bear with me, and we will look at those charts tomorrow. Obviously, I'll have them up for you guys, but if you will believe me, we are in a little bit of a bearish channel on natural gas, right? And natural gas has been trading lower now for the 4th consecutive week. And we've been watching, I'm looking at my other computer here, and I'm looking at the bearish channel that we're in, and I can give it to you guys tomorrow, or if you need it, email me. There is a bearish channel here that we've been watching in natural gas, and it has been just pushing us lower. Now, we're right in the middle of that bearish channel at the moment, so I wouldn't be calling for actual trade right at the moment because we don't necessarily want to fiddle in the middle of the range. But for the instance, we also want to realize that we've been falling for 4 weeks. I mean, we have to retrace some time, right? So we're looking for a retracement up to 375, up to 360, up to 370, 375, as we are trading around the 350 level right now, right, 352. So we want to watch somewhat of a retracement within the next couple of weeks, and there has to be some warmer weather patterns coming in to push natural gas higher. So honestly, for this next week, I will be bullish on natural gas. Trade within the range on the natty gas, buy the high, sell the low, and trade to the upside with this market. The spreads are very tight, volatility is about to burst, and we are going to start to trade a little bit higher. So again, we've been falling for 4 weeks. We have to, obviously, we need some type of catalyst to push us higher. The weather could be that catalyst to push us higher. The spreads are the catalyst. The volatility is the catalyst to push us higher. So, and Baker Hughes rig counts as well were bullish, even though the inventory numbers were bearish. So again, as I mentioned, we could watch natural gas pop, trade higher. Let's try to do that. Let's try to play the natural gas the right way here. As you can see, there's record-setting temperatures, warmer than expected temperatures all across the United States. So that forecast will come into play, and we will rally as we've been falling, as I mentioned, for the last couple weeks. Levels on the natural gas, 361.10 was your high on Friday's pit session. The low is 352.60. We end up closing and selling the day at 356.40. Daily pivot 356.70 here. Resistance up above here, ladies and gentlemen. We have that high, of course, 361.60. We have 369.20, 380.20, and 398. Even up to that $4 level. These are a little bit of a longer-term perspective for the week. And our support down below is 351.60, 350 even, and 349.80. Those are going to be some nice levels to buy if we do get down to the levels, but I doubt we will. I say we don't get anywhere lower on this natural gas, and the rock bottom low will be 352. But that's about it for me, guys. Here again tomorrow, I'll have all those charts ready for you. And we are ready to rock and roll here on a Monday. Again, I will see you all here in just about 50 minutes. All righty, guys. I'm going to give it back over to now with JJ.
Marty, thank you so much as always. Thanks for coming in on a Monday morning for us. Happy Monday to you too as well. And happy 4th of July. I'll see you this time tomorrow, won't I? Definitely.
Yeah.
All right, guys.
Yeah, we'll see each other.
We'll see each other tomorrow. We're going to be on a 23-hour and 30-minute break, ladies and gents. We'll catch you guys here for a Tuesday edition. We got Monday, Tuesday, Wednesday of this week. I just want to make sure everybody's aware of that. Monday, Tuesday, Wednesday, we'll be doing your crude oil broadcast. 7:30 a.m. this week. We'll take Thursday and Friday off. We suggest you do the same. Rest up. Have a great week, and we'll see you guys back here for a full week next week. So shortened week this week. Don't forget to drop us a line. I'm JJ at SchoolOfTrade.com. That was Marty at TradersAudio.com. Don't forget to join Marty and his partner Jeffrey on the NYMEX Exchange every morning at 8:50 a.m. And I've got to hurry up here and open up my live trade room here with the rest of our members with School of Trade. Don't forget, we got a blog with all of our charts posted every morning, and we're also recording this session every day. Check out the recording on our YouTube page or find us on social media. Thanks so much for your time, everybody. Have a wonderful, wonderful morning. Don't forget, you got to learn this stuff so you can earn with this stuff. We'll see you guys next time. Adios, amigos. Bye-bye for now.